Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Former President Donald Trump is safe after an apparent second assassination attempt. We bring you all the latest. Goldman and Morgan Stanley cut China's growth forecasts after more weak economic data. This is markets prepare and brace for big central bank decisions with ramped up bets on a jumbo Fed cut. Plus, it is revealed it took more than 2 years for BMW to discover the extent of a braking system fault that's expected to cost the German car maker nearly €1 billion. Happy daybreak, happy Monday. It is all, of course, about those central bank decisions, but we focus as well on the political impact of the news out over the weekend. We'll bring you the latest on that apparent assassination attempt of former President Donald Trump and the ramifications for that election. But in terms of the market focus on these central banks, of course, up front and centre on Wednesday, the Fed decision, with that debate still being debated lively as well around whether or not they go 25 basis points or 50, and markets starting to increase the bets on that jumbo cut, as we've said. European futures then pointing to gains of 0.2%. FTSE 100 futures looking to add just 9 points so far as we build up to the opening of the session, 8 a.m. UK time. S&P futures looking to add just 3 points, again after decent gains for US and European equities last week. Nasdaq futures currently flat. Let's flip the board and look cross-asset. Treasuries not yet trading. It's a holiday in Japan, South Korea and mainland China. Worth noting, of course, the Bloomberg Dollar Index in focus, though, for us. Softness on the Bloomberg Dollar Index currently down 0.2%. Some of that apparently then the moves you did see on the back of the news around Donald Trump and of course the implications for the US election, and that has played out with the Japanese yen briefly crossing through that 140 level, now at 140.14, so gains of 0.5% for the Japanese currency. We look ahead, of course, to the BOJ decision on Friday, not expected to move higher at least this week, but we focus on that decision and any guidance, of course. Brent 71.58, currently flat on oil. There has been a reduction in output from Libya, but of course the demand question back in terms of the China component as well for us today on the weak data that we got over the weekend. Gold 2,586, fresh record highs for the yellowed metal, and some of that again is pricing in deeper cuts from this Federal Reserve, up 0.3% so far in the session. Let's get then to another momentous weekend in terms of the political landscape of the US. The former US President Donald Trump said to be safe and unharmed after an apparent second assassination attempt. It is believed that the Secret Service detail opened fire on a man who was close to a golf course, on the edges of a golf course where former President Trump was playing. Take a listen to what we heard.
Former President Donald Trump is safe and unharmed following a protective incident shortly before 2 p.m. on Sunday at Trump International Golf Club at West Palm Beach. The U.S. Secret Service personnel opened fire on a gunman located near the property line, and this matter is under investigation.
OK, let's get more on this story then with Bloomberg's news director for EMEA, Ros Mattison. Ros, what do we know then about this alleged shooter?
Well, we know the alleged shooter is a 58-year-old man. His name is Wesley Routh. Not very much is known about him. He seems to have moved to Hawaii about 6 years ago, worked somewhat in construction. He's had a series of he's got a criminal record, but it's mostly for minor offences. Some of those seem to include firearms. But it's more like what would have motivated him potentially to do this if indeed he was attempting to try and shoot Donald Trump. We know from some of his social media accounts that have now been taken down. He apparently did express very strong support for Ukraine in its fight against Russia, really pushing the US to do more to support Ukraine, volunteering himself as a soldier for Ukraine, even though he doesn't seem to have any combat experience. So we don't know if any of that played into his intentions there. There are some evidence that he donated both to the Democrats in small amounts and that he was a supporter of Donald Trump up until a few years ago. But again, this has all been gleaned from his social media accounts, which are fast coming down and being suspended. So obviously at this point, he's very much the alleged shooter. He is in custody. We'll know more perhaps later today.
It's just remarkable what is unfolding in terms of the build-up to this vote in November. And we all kind of almost get immune to the fact that there's this surprise and shock one day after the next when it comes to what's actually unfolding on the ground in the US. Talk to us about what we think this may do or what this has done in terms of the political outcomes for both Trump and Harris.
Well, that is the big question, because obviously this will be the second attempt on Donald Trump's life, potentially, in a matter of months. After the first one, we saw, of course, he got a bounce in the polls. He got an increase in donations very quickly. This time he's been on the back foot a bit in the last couple of days. He had a debate performance that was, a bit messy. There's the concern that his campaign may be teetering a bit with some of the other things he's been saying, including about Taylor Swift publicly and so on. And so, does this reset momentum for him in a way? And if it does, what does that do in turn? Does it merely play again to his base, very established, already voting for him? Or does it change the minds or bring out people who would otherwise not have come out to vote? And they, again, in the swing state areas, are these people now going to come out to vote and vote for him? That's the kind of the leap that we're not really sure we'd see. But does it give perhaps a bit of a reset to his campaign in the coming days? Yeah, quite potentially.
OK, Ros Madsen, thank you very much indeed for the latest. Of course, our EMEA news director, and we will keep you across any additional lines about what we know about this alleged shooter and, again, the potential political read across as well. Let's check in on the Asian markets right now. Avril Hong standing by in Singapore. Avril.
Yeah, Tom, we're seeing the markets in Japan and on the mainland are shut today. And against that backdrop, the gauge of stocks for the region, excluding Japan, managing to clock some gains amid some optimism surrounding potential Fed easing. And that's helping equities in Australia and Taiwan. But we're really seeing all that being offset by the concerns surrounding China. Data over the weekend just paint an even more worrying picture. Whether you're talking about factory output, consumption, investment, they all miss on forecasts. Even new home price declines accelerated. So it really shows you the weakness in the Chinese economy. We saw the Hang Seng as well as Hang Seng China Enterprises Index. This is, of course, the Hong Kong gauge of mainland stocks, managing those declines of upwards of 1% earlier in the session and now pairing some of that somehow. But of course, the story in the past hour has really been about the yen strengthening, and we can see how the Nikkei futures in Singapore pointing to declines as markets in Japan are set to reopen tomorrow. The dollar-yen moves are important to flag here in this big week for central bank decisions. It's amid the backdrop of this expectation of narrowing yield differentials between the US and Japan. We saw the dollar-yen moving below that key psychological 140 level. Even if the Fed does cut by only 25 basis points, there are some expectations in the market that's going to sound dovish. Meanwhile, as the BOJ holds, it could signal hawkish. Certainly from some of the board members that have been speaking and signaling recently, they don't seem to be deterred by the August market rout and how they seem pretty determined to hike rates again. So that is what is at play as far as some of the central bank signaling and positioning is concerned. But note, because Japan markets, of course, are closed, we're seeing thin market liquidity. That could also be something that's exacerbating the moves we're seeing in the currency space today. Tom.
OK. Avril Hong in Singapore. Thank you very much indeed, with a check in the markets and a focus once again on the Japanese yen. To the central banks and the broader story then, we touched on the BOJ, of course, that's on Friday. But before we get there, we have the Federal Reserve. Traders bracing then for what will be a particularly busy week for these central banks with decisions, as we've said, from the Fed, the Bank of England as well, don't forget, on Thursday, and the Bank of Japan on Friday. Bloomberg M Live Asia team leader Garfield Reynolds joins me now for the setup. Garfield, talk to us about the pricing that we're seeing. Fed funds futures now looking at 40 basis points of cuts in September. That is the betting coming through from traders and the Fed's funds futures. What has changed between the middle of last week, when we'd essentially kind of boxed out the idea of 50 basis points, that the view was it's very much 25 basis points on the back of that inflation print, and now where traders seem to be building positions for a deeper cut from this Federal Reserve?
Yeah, Tom, a lot of what happened was that in the absence of actual Fed speakers, because they're in the blackout period, we had some talk from former Fed officials, and those former Fed officials highlighted the idea that 50 basis points was possible, that it should be possible. The Fed will discuss it, which is a fair call. whatever the decision ends up being from the Fed, it's clear that they would be looking, okay, we're going to start cutting. Do we go 25? Do we go 50? And the reminder for markets that 50 was possible has rapidly turned into markets going back towards their bias to bet 450 basis points. This could be a true read because those former Fed officials are, taking some, as it were, backdoor briefings from, the actual Fed officials, or taking the temperature of the room, as it were, and, realizing that 50 is quite possible and in fact might well be what happens. Or it could simply be that by them emphasizing that it may be 25 or it may be 50, that the right sort of market pricing is for a 50-50, odds, which would put you at about 37 to 38 basis points priced in. So then 40 is not that much, out of whack with that. A lot of times you would want to see it go beyond 40 before you're sure that it's priced in, especially I think there needs to be some caution about what's being priced in right now until we see what Europe and in particular the US end up doing when you get markets that have got a lot more liquidity than what we have today in Asia, where Japan is out, China is out. It's a lot easier to push prices around right now in those instruments.
Garfield, talk to us about the read across then from that part of the story around central banks and the pricing around the Federal Reserve and what we're seeing in terms of some of the currencies, gold, but I know you're looking at crypto as well, with Bitcoin down 2% in the session at 58,551. Gold still at these fresh records, in fact, up 0.3%. Talk to us about the read across to gold, to crypto, and what else you're seeing in terms of the moves into some of these asset classes.
Yeah, well, I mean, the read across is this concern about whether or not the landing is going to be soft or hard. And that's also part of the big part of why the dollar is weaker in general. And yet crypto is not really getting much of a helping hand from that. Instead, gold is. So gold usually outperforms in recessions. The worry is, has the Fed fallen behind the curve? There was some criticism of the Fed after the July meeting that perhaps it should have actually cut then and gone 25 basis points rather than holding and signaling that it will cut in August, because it risked not doing enough soon enough to avoid a recession. That risk has only increased in a lot of ways when people are looking at the jobs market data getting worse and worse. There's a lot of concern that when the jobs market breaks, it takes a while, it's like slow, and then sudden, and then it really goes. And you're at that potential inflection point now. Of course, it takes time for rate cuts or rate hikes to work their way through the economy. So if the jobs market is on the verge of cracking, a 25 or even a 50 basis point cut might not be enough by now. Maybe they did need to do it back before. That's definitely something that's haunting investors. That's part of why bond markets are so ebullient. They're seeing the potential for strong gains because they think once the Fed starts cutting, however it starts cutting, whether it's a 25 or 50, it's going to have to go a lot in the coming year. And for equities, the concern is that, yes, we want rate cuts, but again, have they been delivered too late? Is the US economy going to crack? In which case, could be time to get out of equities, not time to get in.
OK, Bloomberg M-Live Asia team leader Garfield Reynolds setting us up very nicely for a major week, of course, for these central banks and that decision, that debate still as to whether or not we get a soft landing, a hard landing, and how many and to what extent that labour market in the US continues to cool or even crack. You can get a roundup, of course, of the stories you need to know to get your day going in today's edition of Daybreak. Subscribers can go to DAYB Go, and of course a lot of focus on that apparent second assassination attempt of former President Donald Trump and the implications for that deeply consequential US election, of course, that comes in November. Here's what else we'll be thinking about the week ahead then. We have touched on some of this, but the Fed decision, of course, will be central on Wednesday. we will also get a revision to the forecast as well for the first time since June. So the dot plots, the revision in terms of where FOMC officials see cuts going after this first one, of course, and to what extent they're starting to factor those in towards the end of this year and through to 2025. On Thursday, it's the Bank of England's rate decision, not expected to move. Markets are pricing in the next cut for the BOE in November. Friday, it is the BOJ decision as we look at the Japanese yen posting the strongest gains, crossing through 140 for the first time since 2023. Coming up, pressure mounts on Beijing to quickly ramp up fiscal and monetary stimulus after a flurry of more economic data misses. We talk China and the consequences next. This is Bloomberg. Welcome back now. Three of the biggest Wall Street banks have downgraded China's growth forecasts due to worse than expected data. Let's get the details then and bring in Bloomberg's chief North Asia correspondent, Stephen Engel, standing by for us. Stephen, what does the August data tell us then about China's ability to meet that government growth target?
Well, we know that according to the calendar, it's running out of time in order to meet that goal of around 5% growth rate by the end of this year. So we have essentially one more quarter left to do that. And by all indications, there were very few pockets of strength in the latest eco data that we got on Saturday. Industrial production decelerating for a fourth consecutive month. That is the longest streak of deceleration of factory output since 2001, September of 2001. We're also seeing, continued tepid, weak growth in retail sales. Once a strong pillar of the economy, consumption. But now we've had 6 consecutive months this year of low single digits growth of retail sales, and also fixed asset urban investment also disappointing. All the major numbers missed analysts and economists' expectations, Tom. So, it just begs the question, what can they do and what are they willing to do going forward to meet that goal? And does it matter to meet that target of around 5%? Well, that question is going to be put to the test in the coming weeks and months.
Yeah, and this could be the second time they missed that target in for the first time in a number of years. The Wall Street banks then revising their views and their forecasts on the back of this data. What is the consensus now, Steve?
Below 5, definitely. We're seeing Goldman Sachs lowering its outlook for growth this year to 4.7%. We're seeing Morgan Stanley 4.6, and also Citi followed suit this morning, also saying 4.7. Even worse for next year, anywhere between 4.5 to 4.2%. Some are unchanged, some are lowering it again because I think it was Morgan Stanley said essentially China is getting stuck in this debt deflation loop. And we all know, and I think Goldman cited it as well, we all know what happened to Japan and those so-called lost decades and that deflation trap and deflation issues that China is now facing. I was in Shanghai the week before last. Yi Gang, the former PBOC governor, was there, and he spoke outwardly, rarely, about the issues and the threat of deflation. And in fact, on Friday, Tom, the PBOC itself actually came out in a very rare statement saying a big priority going forward for the rest of this year is combating deflation. Factory gate deflation, Tom, has been negative, or it's been deflation for 23 consecutive months, almost 2 straight years.
Wow, 23 straight months of softer prices coming through at the factory gate. Stephen Engel, thank you very much indeed with the context around this new grim data set that seems to come week by week for China and the potential policy response as well. And Steve, talking about Shanghai has been hit by the biggest typhoon in more than 7 decades, bringing gale force winds and heavy rain to the eastern seaboard and disrupting holidaymakers at the start, of course, of what is a national festival in China right now. China's financial capital initiated an emergency response on Sunday, closing ports, bridges and highways. All flights in and out of the city's 2 airports were cancelled in the evening. Coming up, striking Boeing factory workers say they are ready to hold out for a better contract. We have the details on that industrial action next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making the news this Monday. Russia reportedly sharing secret information and technology with Iran that could bring it closer to being able to build nuclear weapons. Western officials believe it's an exchange for Tehran providing Moscow with ballistic missiles for its war in Ukraine. The UK and US describe it as worrying and an escalation of Russia and Iran's military ties. The Israeli military says a missile fired by Yemen's Houthis reached central Israel on Sunday. The IDF says the missile partially broke apart in mid-air after it was shot at. The Houthis' long-range attacks on Israel have mostly been intercepted over the Red Sea. Tomorrow on Horizons, do not miss Bloomberg's exclusive interview with Iraq's Prime Minister, Mohammed Shia al-Sudani. The wide-ranging interview covered the nation's economy, OPEC, and Iraq's oil production, and of course his thoughts on the geopolitics of the region. So stay tuned or tune in for that interview. That is an exclusive tomorrow, 5 a.m. in London, 8 a.m. in Dubai. Now, the International Association of Machinists Union says it will meet with federal mediators assigned through the Federal Mediation and Conciliation Service to begin discussions with Boeing on Tuesday. Boeing's offer of an 11% wage increase in the first year was not enough to avoid a strike. The agreement would have given workers a 25% bump over the life of the 4-year agreement, but the union says it is demanding a 40% raise to make up for a 10-year contract that caused years of stagnant wages and axed pensions. Italy and the UK are poised to reaffirm their pledge to defend Ukraine as Prime Minister Keir Starmer travels to Rome to meet Italian Prime Minister Giorgia Meloni today. Sources say they'll discuss a proposal for Kyiv to use British long-range cruise missiles on Russian territory. Deepening economic ties and tackling illegal migration will also be on the agenda at the meeting. And asking prices for UK houses increased at double their long-term average pace in September. Property site Rightmove says the average price of homes coming to the market rose 0.8% to just over £370,000. The jump comes as a sign of new optimism by home sellers in the wake of the Bank of England's first interest rate cut in more than 4 years. And of course, the Bank of England has its next decision on Thursday. Markets are not expecting another cut for the month of September. They expect that to come through in November. Let's check in on the markets then as we build up to a key week in terms of those central bank decisions, of course, with the Federal Reserve front and centre with that decision on Wednesday and the debate still live as to whether or not they go 25 basis points or 50. JP Morgan saying they should and they will go 50 on Wednesday. European stocks pointing to gains of 0.2% after the upside that came through from European and US stocks last week. FTSE 100 points to gains of just 5 points. The DAX futures over in Germany up just 13 points. That's what's being flagged by these futures. Coming up, after a second apparent assassination attempt on former President Donald Trump, we're going to bring you the details and discuss what it all means for the race for the White House. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Former President Donald Trump is safe after what the FBI says was a likely second assassination attempt. Goldman and Morgan Stanley cut China growth forecasts after more weak economic data. This as markets prepare, of course, for big central bank decisions with ramped up bets on a jumbo Fed cut. Plus, it's revealed it took BMW more than 2 years to discover the extent of a braking system fault expected to cost the German car maker nearly €1 billion. Let's check the markets then as we build up, of course, to those central bank decisions and something of a holding pattern coming through across these markets. Yes, a number of the markets are closed for holidays in Japan, South Korea, mainland China. But, of course, you'd be brave putting money, serious money to work, arguably ahead of the decisions coming through from the Fed. The BOE not expected to move, of course, in the Bank of Japan on Friday. It is really all about the Federal Reserve and how deeply they cut. European futures pointed to modest gains of 0.1% after the upside that came through from European stocks last week. The FTSE 100 here in the UK looking to add 5.5%. S&P futures currently flat. NASDAQ futures just softer by 0.1%. Let's flip the board and have a look cross-asset then, where the focus really is on the moves around the currency space, with softer dollar, stronger yen, and the yen crossing the 140 level briefly for the first time since 2023. Now just at that line, 140.15 for the Japanese currency, currently up 0.5%, partly, of course, down to softer dollar, partly as well a reaction to the news out of the US on that apparent second assassination attempt on former President Donald Trump. 71.61 on Brent. We watched the production challenges out of Libya and, of course, a reminder of the weak demand out of China on that weak data. Again, soft data out of the China story over the weekend. Gold at fresh record highs, 2,587 per troy ounce, up 0.4% on the yellow metal. Ramped up bets, of course, on Fed cuts is supporting gold at this point. Now, one of the most dramatic, of course, presidential campaigns has been dealt another shocking development. Members of the Secret Service have foiled a second assassination attempt, apparently, in as many months on former President Donald Trump. Let's get the details then and bring in Bloomberg's Jill Desis, who's been covering this story for us and following with the details. How have the campaigns responded to what has been another remarkable weekend?
Yes, Tom, very shocking development here. At this point, we've actually heard, both from Trump, who put out a statement basically just saying that, he's, survived this apparent second attempt on his life, obviously wants to keep going. I believe he sent out a message to supporters in all capital letters, kind of declaring that fact there. You also had Vice President Harris, his competition for the presidency, put out a statement saying that, there's no place for violence in America, that she was glad that he was safe. Same from sitting President Joe Biden there. That doesn't seem that the campaigns are going to suspend any donation efforts or anything like that, aside from these responses. But I think at this point, Tom, it really does just show how dramatic and contentious things have really become. I mean, this is really just 2 months out from when Donald Trump was on stage at a presidential rally in Pennsylvania, where obviously at that point he was also targeted by another gunman who, tried to assassinate him. So the fact that you've had these two events happen in quick succession kind of really does spotlight just how contentious and how dangerous it really seems like things have become as this election really heats up. We really only have a couple of months there until the vote count in November.
Yeah, as you say, a very acute reminder of the political violence risks in the US around this very, very tense election. Then, how is it likely to impact the race, Jill?
It's really difficult to say at this point, Tom. I think we'll probably start to get some polls in the next few days, and we'll see whether or not it has any kind of a measurable impact on there. A lot of recent polling shows Trump and Harris in a statistical dead heat, really. Maybe she kind of ticked up after the most recent debate. I think that's really the question here, is how much this actually shifts the narrative potentially in favor of Donald Trump. So I think by most measures, he had a pretty poor debate performance against Kamala Harris last week. That did seem to be reflected in some national polls that came out, where she was given sort of a slight edge there. What we did see after the first attempted assassination against Trump in July was, a bump against, Joe Biden then, who was the candidate. But as we have seen throughout this summer, Tom, there's been so many twists and turns in this election. I mean, after that first attempt, we saw Joe Biden drop out of the race. You've got a completely different candidate at the top of the Democratic ticket. So, again, we'll see what those polls show us. But it's just, there's so many moving parts here, and there's a lot that is really kind of twists and turns. And ultimately, at the end of the day, again, still in a really, really tight race between these two candidates.
Yeah, and about an hour ago we saw tweets, or at least comments on Truth Social, of course the platform that Trump owns, and he was thanking the Secret Service and law enforcement for the job that they've done. Is there still pressure on this Secret Service, given all the scrutiny that it focused on the back of that first attempted assassination attempt?
Yes, well, Tom, as you pointed out, so far the initial reaction from Trump himself has been in praise of the Secret Service. The Sheriff's County Department has also put out stuff saying that they did respond pretty quickly to this. As our viewers know, Tom, after the first attempt back in July, there was tons of heat on the Secret Service. The head of the Secret Service actually resigned in the wake of an inquiry there. There's a bipartisan inquiry committee that's been put together to investigate that first shooting. It seems like they'll also be involved in the second one. This case has been, a bit different in that it obviously took place at Trump's golf course, private location, where they did intercept this person about 300 to 500 yards away from Donald Trump. He apparently was set up on the perimeter of this golf course, a hole ahead of where Trump was golfing. We'll have to see, though, whether or not, just the fact that you even get someone that close to Donald Trump in this kind of situation, impacts things, but does just, I think, point there, Tom, to the fact that, this is, again, a really, really dangerous, really sort of contentious situation that has involved, a lot of different security measures trying to protect these candidates as this race really gets into the final stretch.
OK, Jill Deeses, thank you very much indeed with the latest on, frankly, what is another disturbing weekend in terms of the political tension on the ground in the US as we build up, of course, to that November vote. We will keep across that story in all its detail, of course, in the hours ahead. Now, switching focus to a major corporate story in Europe. BMW taking more than 2 years to discover the extent of a braking system fault that may cost almost €1 billion to fix. Bloomberg understands customers and dealers began complaining to the German automaker about faulty brakes in a car in June 2022. Let's bring in the details, get the details, the analysis. Bloomberg's Oliver Crook in Berlin, who of course follows what is happening and what is evolving in the auto space of Germany very closely indeed. Ollie, just how damaging is this saga for BMW in terms of the brand image and the financial cost to this company?
Well, Tom, I think the main thing you can say about all of this is a bad time to have bad news in the auto space. It is really bad time to have bad news in the German auto space, right? So this is a time when maybe investors are a little bit less forgiving of things that might be sort of more ordinary in other times. But this is a massive recall. Remember, this is 1.5 million cars. This has to do with the brakes. So this is obviously a fundamental part of the car in terms of safety. It's going to cost BMW basically €1 billion to try to fix. Critically, where it hits their business is it also had their sort of margins, their targets were about to 8 to 10%, which is sort of a comfortable, great margin for BMW. They've reduced that now to 6 to 7%, which is a material sort of downgrade. And this hits the cars across the fleet, right? This hits everything from the sort of SUVs to that flagship 7 Series, all the way to the Rolls Royces, Tom. And listen, if you paid like $400,000 for a car, you may not be too thrilled to get a call to say, hey, listen, we need to, bring your car back in to fix it up. And that is some of the reputational damage they're dealing with. We should say, Tom, though, that there have been no accidents or injuries that have been yet reported to do with these failures. So this is, where they're not failures, but they're issues with the electronic braking within the car. So this is just sort of precautionary. There are some questions about whether, why it took quite so long. We understand now from our reporting that the first complaints were back in June of 2020. So this is all sort of swirling together at a time for, as we mentioned, is really difficult for the auto industry. And Tom, a moment when BMW was actually doing quite well for the German automakers, still having sort of great EV sales, unlike Mercedes and Volkswagen. So really unwelcome news for one of the biggest car makers here in Europe and in Germany.
Yeah, and Ollie, look, there's a couple of issues facing Germany right now, but clearly it seems near the top of the list has to be what's happening in the auto sector, but also what's happening in terms of the focus on migration, in terms of the focus on refugees, and how that's tying in to domestic politics in Germany. We've seen some of those changes around support for the AfD. This is a big day for Germany today on that challenge around migration. What's happening?
Yeah, so listen, Tom, we have another state election this coming Sunday, and in the last two, what we saw was a huge upsurge from the far right, the AfD, Alternative for Deutschland, and the far left, all of whom are united on one topic, which is immigration, wanting to stop immigration coming into Germany. As a consequence of, in part, how they're doing so well in politics, the Scholz government has now instituting border checks on all of Germany's land borders, beginning today for 6 months. Now, you've already had border checks on some countries, such as Poland, Austria, the Czech Republic, but this is extending to every country that borders Germany. So Denmark, France, Luxembourg, now they're going to have border checks. This effectively, Tom, suspends Schengen, which you're allowed to do for temporary periods of time, for 6 months. Now, the Scholz government is trying to say that they're sort of cracking down on illegal immigration. We should say that Germany is probably the number 3 recipient in terms of host countries for refugees. They have more than 2.5 million of them. But why it sort of matters is it's actually really not great news for some of the bordering countries, where you had Donald Tusk calling it totally unacceptable, the Austrians saying we are actually not going to take people back that you rejected the border. And Tom, what's interesting is there are some people obviously that are big fans of this move, such as Viktor Orban, who says welcome to the club, Germany, and Geert Wilders over in the Netherlands saying great idea, we should do this in the Netherlands as well. And this all, Tom, in the context of this new European Commission, where you're starting to see, frankly, a lot of divisions among some of the European countries coming to focus, and suspending Schengen temporarily and a really anchor country for the European Union is not really an encouraging sign, as Ursula von der Leyen tries to create a unity government into this new commission in November.
Yeah, Ollie, look, as you say, it really exposes those splits, doesn't it, in quite dramatic form. And we're seeing that, as you say, in terms of the response from some of the players, whether it's Orban or, of course, the Polish Prime Minister as well, President. Oliver Crook in Berlin, thank you very much indeed for the latest on both the refugee story and the migration story in Germany and the auto sector. Two key topics, of course, for policymakers there. Coming up, as traders brace for crucial central bank rate decisions this week, we're going to look at the implications for emerging markets. Trang Nguyen from BNP Paribas joins us next. Calls around how to position in EM as we build up to that expected cut from the Federal Reserve. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the Fed's first rate cut in 4 years, widely expected, of course, on Wednesday, with several other key central bank decisions around the world this week. Let's bring in right now my next guest, Trang Nguyen, global head of emerging market credit strategy at BNP Paribas, for a view on how this likely Fed cut is going to ripple across the EM space. Trang, let's start with where BNP Paribas stands on this debate as to whether or not they go 25 or 50. JP Morgan reiterating that this Fed should and will go with a jumbo 50 basis point cut. Where does BNP Paribas stand on that expectation? And then we can draw out your views on what the implications are for EM.
Of course, so quite the debate. I've heard you discuss this extensively this morning already, 25 or 50. Well, at BNP, we think that's going to be a 25 basis point cut. The last payrolls report was strong enough. Last week's inflation data was also sufficiently strong enough, in our view, to justify a 25 basis point cut. So we're still looking at a base case scenario here of a soft landing. So this synchronized cutting cycle means that central banks will adequately deliver rate cuts in a manner that is preemptive and timely enough to engineer this soft landing scenario. Now, having said that, the risks around this are quite significant. So needless to say, we have the U.S. election coming up that could deliver quite binary results and binary implications as well. So it's not just about who wins the election, but also the makeup of Congress, of the government. Yeah. And so, we're looking at trade policy and fiscal policy. In a divided government scenario, we think that fiscal policy will remain more or less unchanged. But in either sweep scenarios, it could mean looser fiscal and therefore higher yields. And so, in addition, with a potential Trump victory, we could also see a reimposition of tariffs, which would have inflationary impact as well. So the results could be very nuanced here, and so I would caveat that while we're looking at a soft landing as a baseline scenario, the risks are significant.
Yeah, so you still have that soft landing scenario as the base case. You're looking at 25 basis points from the Federal Reserve. But as you say, there are some really important caveats. And you touch on US politics. And we've been reminded, of course, over the weekend of some of the pretty dramatic volatility in the lead up to that vote. So what is the positioning then? You've mapped out different scenarios on the outcome of this November election. Let's get the details on US politics. How do you position around that? How much cash do you want to have on the sidelines? How defensive, at least, do you want to be in the lead up to that vote?
Sure. So we're looking at lower yields, right? So I think that is a trade that is quite consensus at the moment as well. We think that the bond curves should be steeper. And this is the beginning of a weaker dollar, right? So we're seeing the end of a very prolonged dollar bull cycle here that, in our view, has lasted about 13 years. So this fading U.S. exceptionalism theme is one that's going to play out in our view. Now, what's the key risk to that? Well, a red sweep scenario would certainly challenge that view. But again, the baseline scenario for us is a weaker dollar. Yeah. With weaker macro, we think here that cyclicals is somewhere you want to avoid, especially in credit markets. We've benefited from low vol and tighter credit spreads for much of this year. We think near term that's going to reverse a bit, but as history has shown us, usually it is risk off leading up to the election and then risk on later. So we think, at least in my world anyway, in EM credit, it's time to be a bit more defensive here. I've been quite bullish in high yields for some time, but I'm advocating some risk reduction just near term, even though the fundamentals are still very much intact. Okay, so you're reducing risk on high yield, and US politics is part of the understanding around that. What would you need to see to turn more risk on in the credit space and to ramp up your risk exposure in that space, to get back into high yield? What do you need to see? So I don't expect that we'll see that the U.S. elections in the next 2 months to really drive that, because it's going to be a very close and contested race. After the fact, it's going to be, we'll know the outcome. We can assess the fiscal and trade implications, but also importantly, we need to assess the valuations as well, right? At the moment, I'd argue that we have limited premium to really justify more risk addition here. Also the inflow picture just hasn't really come back, right? I think we've discussed that, we've had this debate quite a lot every time I've joined you, and we need to see more rate cuts for inflows to EM to return, because at the moment we're still competing with U.S. credit and with money markets. What level of cuts drives those inflows then? Is 25 enough to start the inflows, to get them off the sidelines and get back into EM? Or do you need much more than that? I think we need much more than that. 25 is already priced by the markets. So we need to see this more prolonged cutting cycle. We forecast a cumulative 200 basis points of cuts by the Fed. So we need to see deeper, we need to be deeper in this rate cut cycle for EM to really benefit from the inflows. Okay, talk to us about China. We had just a reminder of the challenges facing that economy. And every time I've spoken to you, you've taken a very conservative view on China. But if you're a brave investor who wants to get exposure and maybe is looking at a valuation appeal in terms of some of these assets, whether it's dollar or yuan denominated credit in the Chinese market, is there anything for the brave that is looking potentially attractive in China? At the moment, I'd say no. So with the weak data that we've seen just over the past week, I think markets are now expecting more stimulus measures. But we've always maintained the view that a more aggressive kind of policy response is very unlikely. The authorities are very reluctant to introduce more imbalances into the system, right? So we think that their policy response is still going to be very reactive and timid. And that remains the case. But I think that is still enough to backstop a more crisis-like type of market reaction. So it's all about the valuations. Okay. Trang, thank you very much indeed. Really important context, of course, for the EM world as we lead up to our expected cut from the Federal Reserve, of course, on Wednesday. Trang saying you need to see deeper cuts, maybe into next year, is my takeaway at least, before you see significant EM flows picking up again. Trang Nguyen, Global Head of Emerging Market Credit Strategy at BNP Paribas. There's plenty more coming up. We're going to break down some of the data that we're seeing out of China, particularly around the housing market and how that challenges the economy. Stay with us. This is Bloomberg.
Welcome back. You are watching Bloomberg Daybreak. Happy Monday. You're watching Bloomberg Daybreak. We had some grim data out of China over the weekend. There was a lot to focus on, whether it's industrial production, fixed asset investment, retail sales, all coming in weaker than expected. But one point that I wanted to zero in on, because it's so consequential for this economy, the largest, of course, second largest in the world, is the house price story. New home prices falling to the lowest level, the biggest drop that we've seen since 2014. Barclays has been doing some analysis around this, and the falling house prices in China up until now have wiped out about $18 trillion of household wealth. And that, of course, is weighing on the consumer, it's weighing on demand, and it is leading to this scenario potentially where you get a continuous cycle of deflationary prints because the consumer and households are so crushed in China because so much of their money is tied up in real estate. And that's the latest print that's come through. You've just seen that a round of continuous price pressures, and that's despite policy measures by Beijing, whether it's cutting interest rates on mortgages or encouraging local governments to buy up property or indeed removing a lot of the restrictions on property purchases. None of that has done anything to halt the slide in prices. Until you get that stopped, then you're not going to be able to fix this Chinese economy and get growth on the upside, particularly around the consumer. Let's flip the board and have a look at what is happening in terms of those growth expectations then. And the forecasts around the target of 2024 being slashed again by the likes of Morgan Stanley, by the likes of Goldman Sachs, by the likes of Citigroup, because the target of about 5% just looks completely out of sync given the data that we're getting out of China. So Goldman Sachs now revising lower their target from 4.9% to 4.7%. On the downside, the lowest coming through out of these three is Morgan Stanley, saying just 4.6%. Is President Xi Jinping a little bit more relaxed about this? The language suggests that maybe he is, but the consequences are there, whether it's a ticked-up unemployment rate amongst the youth in China. Of course, the consequences around what is happening with the spiralling downward prices around real estate and whether you get into this deflationary funk in China. Let's flip the board and talk about the US as well, because when you think about China, the other headwind, of course, is potential additional tariffs and friction coming through in the lead up to, or at least on the back of that vote in November. But of course, the consequential moment over the weekend was what looks like a second assassination attempt on former President Donald Trump. What this has done in terms of the odds so far, not a lot in terms of how the markets on Predict It are betting around these two candidates. Kamala Harris still has a marginal lead. A lot of other polls, of course, suggesting that this race remains incredibly tight. We continue to bring you the impact of that pretty remarkable and momentous and frankly pretty shocking weekend out of the US as well throughout the next few hours. The opening trade is up next. Stay with us. This is Bloomberg.